Hello, super traders. Welcome back. Today we have a special guest with us. We have Andrew Lang from Equity Trading.
Acuity
Trading. My mistake. Andrew, how are you?
I like it
the
so
third
much.
time I will do is the best. Don't worry. Andrew, pleasure to have you here with us from Barcelona. How are you?
Very good, thank you. It's proving to be an exciting week this week in the financial markets. Things are really hotting up with non-farm payrolls last week. And that's actually what I wanted to talk to you about. How are you guys, incidentally, before we start talking?
We are great.
We are great.
And we really want to hear from a news expert like you. What are the sentiments right now in the market after the last non-farm payroll print?
Well, let's start off with some news. I won't show you the news item, but I'll just tell you what I read this morning when I woke up. Dollar at 12-year peak on euro.
Wow.
Emerging markets spooked. Now, to me, this article is really interesting because it then went in to discuss what happened with non-farm payroll last week.
Exactly.
And as you guys are obviously aware, non-farm payroll came in really good. Figures that we looked at last week and predicted last week, and it has changed the dynamics of the market quite significantly. So people are rushing away from emerging markets into the US dollar, and we're seeing companies' share price fall in the US as investors look to see the Fed raising interest rates. Have you been looking at this, guys?
Absolutely.
Yes.
We looked at it. We are trading it. We love the market. We are following the current market sentiment. As we mentioned in our last segment from the end of the week, it was Thursday, I think. And I can tell you that bond investors took the notice as well and pushed the US 10 years treasury rates from 2.11 to 2.24. And
Wow.
we mentioned last week, we mentioned that $17 billion pulled out, US investor pulled out $17 billion from equities, and they are shifting their investment to bonds, and this is the outcome of the recent activity, and of course the outcome from the NFP. We see the bonds yields higher, we see the S&P 500 lower, and we see the US dollar strengthening. But I'm not sure about the S&P 500. Although we can foresee interest rate hikes during the second quarter of 2015, I'm still not sure about the free fall of the US market. I'm not sure that this is the right timing to take the position against the US market. But of course, we see that the US dollar is strengthening. I'm expecting that the US dollar index will hit 100, round number, and we are going to have a party here. Yes.
What do you think, Andrew?
Well, let's take a look at what everyone else is thinking, let alone what I'm thinking.
This is really
guys, I simply interpret what the world is thinking. And
That's
I'll
true.
take you to my screen. So as I said, this was the story I saw this morning, dollar at 12-year peak. But let's look at non-farm payroll. So you should see my screen now with a chart of non-farm payroll. And what we see here is the last 60 days of how people are writing about non-farm payroll in the press, in the blogs, etc. And you can see it's really getting really positive. And we get to a height as non-farm payrolls released last week, and everyone is really super buoyant, hence we had such great figures. Now, I'm not predicting non-farm payroll in these, I'm just telling you what everyone else is feeling towards them.
Yes.
But if we look at the longer view, you can see in relative to the whole of last year, as my screen updates, is that people are feeling really excited about the figures. And
Wow.
as I said last week, we saw this figure really climbing sharply higher in terms of positivity towards non-farm payroll.
What is the period of time that this chart is presenting? As you mentioned.
This is 1 year.
Okay.
So we saw a peak back in That was about June last year. And then people have been feeling slowly more negative. And then suddenly, the last month or two, people have been really getting excited about unemployment data.
Wow. And the
So,
high volatility. What the high volatility, the chart that the line presents?
well, this is just the blue line is actually the raw sentiment, and the pink line is just the moving average. We use moving averages and other momentum indicators to cut through the oscillating nature of our data. So we're just really presenting it in a smoothed out fashion. But let me take you onto the euro dollar and see how that's performed. Okay, so here we've got in blue our raw sentiment, and once again we've got the pink line is the average of what's been happening. And I believe I showed you this last week. We got a firm falling in sentiment from about mid-February, and we've seen the continued slide of the sentiment towards the euro dollar before it even actually started sliding in price. And we see that continued. And today, interestingly, up in the top right-hand side, you can see my signals. We're getting a very bearish longer-term view. But intraday for today, we're expecting a minor bounce.
As you speak, we saw a false breakdown, a false price breakdown during the last couple of minutes. We saw that the price is depreciating to 107,200, and now we have a clear pickup in prices 107,650, 40 pips in just few minutes. Upward movement. We can see the pickup right now in the market. There was a false intraday breakdown, and right now we are moving a little bit higher.
Well, Yaron, let me show you something else that's really interesting. Is not just the sentiment towards the euro dollar, but can you see my screen again?
Yes.
Now we're going to be looking at the fear level of euro dollar. Now, let me remind you again, fear is a good way of understanding volatility in the market. And look where fear is going. It's going right up through the ceiling. The fear in the market about the euro dollar is seeing no bounds at the moment. And so we should see a large amount of increase in volatility as we go through the trading session on the next few days.
Yes, it's amazing. The volatility is high right now. We can see the fear presented in the market. We can see that the average true range is accelerating, presenting high volatility. We can see a clear upside. It's amazing. If you will look at the movement of the euro dollar right now, you will see a massive movement. A lot of traders are buying the euro right now. This is a temporary correction. All the measurements, presents high volatility and much higher trading activity. We can see that more and more market participants are joining the market right now, buying at the bottom, and we can clearly see high volatility activity in the market right now. It's happening as we speak.
And what's really interesting about these programs that I show you, these charts I show you, it's a really good way of cutting through all the information that there is out there. The problem we find, as you can see, there's so much happening in the markets. We've got non-farm payrolls are coming out, and that's affected interest rates, which in turn has affected equity markets in the US and the euro dollar, of course. And the one thing we haven't mentioned is how it's affecting the emerging market, both currencies and equities. And we've seen in that article I was talking about earlier, we've seen a rout on the Brazilian real and also the Turkish lira as people are pulling assets out of emerging markets.
And from the Norwegian krona as well, right?
Right, as well. I think it's not just emerging, actually. It's just everywhere. I mean, looking at the Nikkei as well. And
everything is invested in the US?
Yeah, people are moving assets towards the US as my guess is that people have been looking for good returns and they're expecting interest rates to rise quickly in the US. And if we look at Japan and the euro, the main trading partners, we've got quantitative easing going on there. So it's a perfect storm for the euro dollar and the yen dollar as well.
What do you think about the S&P 500 or the US main indexes? We saw a correction during the late Friday New York session, and today we see that we are sitting around the support level right after the first correction, the first downward movement from 2,120 to 2,060. 60 points downside to the downside by the S&P 500. Is this going to happen? I'm not so sure. I'm really not sure that this is the right timing in order to see another massive correction in the US market.
Well, whilst you've been saying that, I've just been bringing out my chart on the S&P 500. And interestingly today let me just share my screen with you. There we go. And what we've seen is a big fall off, obviously, in sentiment towards the S&P 500 in the last week, as information on non-farm payrolls coming through. But we're also seeing a slight uptick in a sort of a bounce in sentiment as people come back into the market and are looking to see a buying opportunity. And whilst you were talking, I was also looking at the volatility, which, let me remind you, is a level of fear and volatility. And that's been quite high for some time, and it's fallen as the market has fallen. But we're now seeing a big uptick again in fear as people are getting nervous of this bounce that's coming.
Correct. We can see that the fear factor, the VIX, the velocity index, the US velocity index, is rising today 3.24% just today, and it presents the same picture like your charts, and the fear is right now is implemented in the market. In my view, I think that we are going to see a bit higher price levels for the S&P 500 during the upcoming days. But in the future, I'm expecting a massive correction. As you mentioned, we don't have alternative. As for now, we don't have any alternative. The emerging markets are in trouble. The Turkish lira, the Japan market, and the European market is under stimulus program. But I think that some other channels will open up, or some alternative will open up to the US
How do you feel about the European markets, out of interest? Because now with the large slide in the euro dollar, European exports are going to become exceedingly cheap to the rest of the world. So will that start? How quick will that come through in corporate results for Spanish, German, French companies?
That's a great question. I think that the pickup in the economy growth will be constructive, and it's going to be step by step. We're not going to see rapid acceleration in the economy, and I don't believe that the ECB itself can help the market or help the economy situation by its own. I don't think that the balance sheet of the ECB presents enough money in order to support the Eurozone. So I think it's going to take a while, between 6 months to a year, until we see a recovery, maybe at the end of the second quarter of 2015.
But just the thought of quantitative easing has already had an effect. I mean, the fact that they're now talking about quantitative easing in Europe has seen the euro fall massively, and that will then feed through into corporate results. It's as if the ECB doesn't actually need to even pump money into the economy now that the euro has fallen. That will give a massive boost.
Yes, maybe. So it's walking on the edge. Now the ECB and the entire Eurozone is walking on the edge. Whether they will be successful or they will succeed to exit the current crisis or not, this is a big question. Of course, there are great opportunities now in Europe. You can buy You can buy cheap European goods, and of course the trade balance will change in favor of Europe, and we are going to see the results, but it will not be immediate. We need to see the job data. We need to see some more employment increase in the employment participation, which is very important to the European market. Right now, the unemployment is very high, more than 12% in the entire Eurozone, and we would like to see more and more participants in the jobs.
Yes.
Okay.
Andrew, anything else you would like to add?
No, I think that's it for the moment. I mean, I did bring up a chart just at the end there. I won't go back to that chart, but what we saw was the Nikkei 225 falling massively over the last few days, as we'd expect. But most interesting, as we see the sentiment in the S&P 500 picking up, the Nikkei continued to fall in terms of sentiment. So divergence in the equity markets.
Okay, I want to add one more thing just before we will end up the show. Next week, March 18th, we are going to have the Fed meeting minutes. Wednesday. Before Wednesday, we have to look at the market sentiment. We have to look at maybe you can read some news before the Fed meeting minutes, and we would like to see the volatility or the speculation before the Fed meeting minute. I think this is one of the most important minutes during the last few years. I think that that would be the final catalyst or the final indication whether we're going to see interest rate hikes during the second quarter of 2015, or it is going to be later on this year or at the beginning of 2016. This is the focal point of the US market. This is what I think.
Okay, I'll take a look out for these figures over the weekend.
Great.
Okay, so till next time, thank you very much for the interesting topics that you presented this week.
Thank you, Andrew. It was great.
Thank you, guys.
Having you here.
It was a pleasure.
Okay, till next time, have a lovely week. Thank you, Andrew.
All the best. Bye-bye.
Bye-bye.
Right now, taking a short break. When we come back, right now, we're in the next session. We are going to talk about today's trade opportunities. And of course, we're going to start to trade.